Good morning, traders. Welcome to the TMT Stock Market Strategy video for Monday, December 19th. All right, so expiration Friday, monthly expiration is gone. It's over with. And now we're getting and approaching the end of the year. We have not had any tax selling, and that could happen because of the fact that we have the new tax plan that Trump has proposed, and that could very well be. But we do have 2 weeks left of the year, and we'll see which way this market is headed. As of right now, very, very quiet. We have extreme complacency across the board, guys. I mean, gold getting crushed. We talked about that. Hitting our first target of 1120. 1120 and change, about 1122, 1124, close enough. We have bonds getting slammed. I mean, slammed. Equity markets at all-time highs. Complacency levels are at extremes. VIX at all-time lows. And we have the commitment to trader reports that read caution. Really, the producers, which are the smart money, are heavily and the most short the Russell 2000 ETF. Okay, they are not as short gold, meaning very little short, because they're always short. Remember that. But they're not extreme, so that means that they think higher prices in gold. And bonds, they're long bonds. The first time in a very long time that bonds are actually starting to be purchased by the producers. And then you have rates at extremes. So you have an extreme here, and eventually the rubber band's going to snap back. The thing is, we don't know when. Market divergence could last for a very long time, longer than you or I can manage an account without getting stopped out. So there's a lot of danger out there where a lot of people and a lot of pundits from CNBC, Bloomberg, Fox Business News, whatever you want to look at, and Huffington Post, and whatever the case may be. And again, I just mean that in general. They just keep talking about Dow 20,000, Dow 22,000, and S&P 2,400, 2,800 by the end of the year, and now going into 2017. When you get the euphoria of all of this buying and take a look at all of the news, the headlines, you'll see Barron says Dow 20,000, and when you get the headlines saying that, I think you should be looking to buy protection or tighten your stops for the longer term investor. If you're holding longs in a long-term account, be prudent to start protecting your gains. Okay, and now at TMT we're more we teach more day trading, swing trading, and stuff like that. But just want you to give you guys a heads up, because I haven't seen something like this in a very long time, and it scares me. It does scare me, and I'm not looking to scare anyone. And nothing may come of it. But I have never seen extremes like this. 29 years going on 30 doing this. So I just wanted to give you a quick warning. But I'm not saying that we're going to crash at any time soon. Obviously, pullbacks turn into corrections, and that's what's going to happen. We're going to just monitor any type of pullback. We had a couple of days, but that's nothing to write home about. But you can see that pullbacks, there's definitely distribution happening, and institutions selling into all of these rallies. Okay, so that's another real big red flag. Let's get right into the NYUD. You see here Vance decline with volume, as you guys all know that follow the videos and follow me for many years. One of my favorites, and you can see here we have what? We have market divergence, right? We have divergence from price. Price is making new highs where this has not, right? So if we were really strong in this rally, as we see, we made a new high here, and we made the new high right here. Well, this pullback and this new high, not even close. So that tells me that's a big red flag. Okay, it's a big warning sign. Next, the CPC put call ratio, 2-year lows. Okay, remember, it's inversely correlated. When this gets really bullish, that's actually bearish. Okay, so we have the put call ratio. That means we have outnumbered call purchases versus put purchases. So that means that everybody's out there buying calls. And what happens? What does the market maker like? They always take the other side when it's one-sided. Always. So watch out. Again, be careful. And really, this is a bad time of the year to be short. But if you are a longer-term guy, a longer-term view, and you want to short something that will complement your portfolio. Okay, now obviously I don't know what that is, but something to think about. Here's the VIX. Again, all-time, well, I shouldn't say all-time lows, but we're at near the all-time lows. We're right around 11 and change. But you could see Bollinger Bands are pinching really tight. That means that we're going to have a big move one way or the other. All right, and that's something that I need to point out to you guys. Just want to make sure. I would feel terrible if something does happen and sells off, and I point out what I see. Okay, next is going to be the gold, and you can see here in the gold contract we hit our target of 1120. Okay, from this move up, and next target is going to be 11, and then the 1080. Doesn't have to get to 1100 or 1080, obviously, but again, extreme complacency. There's no fear, because if there's no fear, inflation is creeping up, which is positive for gold, obviously, and fear. So it's that safe haven trade. Okay, so it's something that you guys, I want you to be aware of and take a look at it. But gold's coming into a real sweet spot. Here's a GDX. I'm really looking at 17. Here's from our Pro Trader Premier video off the daily chart, okay? There's a lot more levels involved in the intraday charts for the day traders, so come check us out at TMT, tradingmarkettechnicals.com. Next is going to be GLD, and again, we were looking at that as well. We wanted to just show you these levels that we provide for you guys, and I think the 103, I think this 106 is barely going to hold. I think we're going to break through it and pop back up the next day. That is going to be your cue. We break through, watch, in any sell-off or capitulatory top or bottom, right? When we break down, the next day we take back the candle, that's the buy signal, okay? So if we break down today, all right? Let's just say that we take this down here, and the next day we take back the candle and even close at its high. That's going to be your trigger. By the end of the day, start looking to buy some GLD or GDX, okay? Or any stock for that matter, okay? Next is going to be the spiders. I want to show you, this is my money flow chart, and it really is reliable. I want to show you here's a 250-day moving average, which is just about a year's worth of trading, and you could see what's happening here, all right? We are getting distribution. Who's selling this? It's not the mom and pop, not the retail. It is the institution selling, and it's above the normal 250-day moving average. So what does that tell me? That tells me that sellers, which are the institutions, are starting to get out. Here's the accumulation distribution band. You can see that here starting to roll over. Here's our on balance volume, same thing, looking over, and look at the chalk and money flow, right? And look at the money flow index, all starting to come and roll over. Okay, this is a good read. The CMF and the money flow index, these are good reads, guys, to see if money's coming out of the market. And sure enough, you're at the all-time highs. You haven't gone anywhere. I mean, we literally, I think we sold off a few pennies. We're down 44 cents on a $225 stock. It's actually absurd. It's unheard of. And we're at $225 in the SPY. It's in a fully and fairly valued market. So this here is a big red flag for me. You know, money supports the price, right? Price is what pays us, but money supports price, and money is not there. So that's something that I want you guys to be aware of, okay? Next is the spiders. You can see here at the 210 area. And again, I'm just showing you some of the Pro Trader Premier video levels and patterns that we trade off of. We're rolling over on a daily chart. Again, nothing to write home about. The first level is going to be that 20, and then the lower end of that bearish rising wedge. 60-minute chart, I mentioned back here, I believe it was right here early last week, we have negative divergence. Be careful. Price moving up. Sure enough, that's starting to pan out. And then here is your RVX, and this is a volatility index for the Russell 2000. We closed outside of it. Look at this little thumbnail. So this here tomorrow, if we close back in, that's going to be a buy signal for the volatility of the Russell 2000, and it's going to be a sell signal for the Russell itself, the IWM, okay, or the TF if you're trading the futures. All right, so let's keep an eye on that. And here's the IWM. You can see here we started making a lower high from the previous all-time high. All right, we need to take out this little pivot low of 134.71. I think we'll shoot right back down to the TMT's price proprietary channel, and of course that 38% will be our first target, like I've mentioned, for the last 5 days. Last is going to be your Qs. You can see starting to roll right back over again. So keep an eye on things, guys. There's a lot of moving parts happening, and you know, with the videos just too, I'm going way over that I should be. but just really be careful out there. Okay, don't get caught up. Remember, if you really like the market, wait for the pullback. The market will definitely pull back at one point in time. Have a great day. We'll see you tomorrow.